All right. So what are the requirements from investors to allocate to an independent sponsor deal? What are the requirements? It's really going to depend on who you're speaking to, right? Different capital providers have a range of different requirements. Some funds have much more rigid mandates where some other family offices are much more flexible with what they're looking for. It's long-term capital deployment. So it'll depend there. But for the most part, all of them will be into the same similar framework. And that can be a minimum EBITDA of probably 2 to 3 million on average. Some are larger, some are smaller. Almost all of these companies that you're investing in need to have stability with proven cash flow generation. Again, this isn't venture. We're not making speculative bets here. Almost always needs to have a clear path to at least a 3x return within 3 to 7 years. Needs to have some sort of defined exit strategy, right? The deals have to be post-LOI. You can absolutely network with these investors and different capital providers beforehand. It's encouraged to make this relationship, but really post-LOI is when all the magic happens. You can be the greatest sponsor ever, but if you have a bad company, no one wants to invest in that, right? There needs to be an appropriate multiple paid for the company, and the capital stack needs to make sense. There needs to be a management retention plan more times than not. There's going to be key employees, key management people. You got to make sure they're sticking around. Don't want to take the risk otherwise. A sponsor with relevant industry experience is important, and that can be very much related to the specific niche, or maybe it can be more like private equity fund experience related there otherwise. Track record, really important. Most capital providers want to see skin in the game, meaning the sponsor themselves need to be putting up a meaningful amount of capital into the deal. They need to be investing in it themselves, right? Reputation of the sponsor needs to be good. And there's a ton of other different requirements from the different funds and family offices out there. Speak to each one to see what it is. At Capital Pad, we're a little more flexible. So due to our unique structure, we can go as low as EBITDA of 750,000. And obviously there's no cap to how big of the companies we are. Capital Pad will only look at deals that have the potential for 30% or more IRR penciled out in a very conservative model. We want to see low growth scenarios. We're not really investing on future hope, right? It's very much like, what is there now? What's a sensible growth coming from that? And that's what's good. We also want to see industries that just aren't too difficult or competitive or hard to understand, right? We want just normal, boring, sensitive industries. And that's what we're all about. So that's Capital Pad. But again, each capital provider is going to have their own preferences. If you got any questions, please reach out. Would love to talk. Thanks so much. Cheers.